Hey everyone, it is Evan here from the Trade Risk on Tuesday, March 12th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to kick things off with our dashboard here. You can see it was a fairly mixed Tuesday session. It was mostly green right across the board, except for the Dow Jones. We still have Boeing stock lagging a bit on that index. And if we look at the 5-day numbers, you can see mixed as well. The Q's out in front leading, and the IWM is on the bottom of the pack there, minus 1%. But this is quite the improvement over last week's video. So when we did our weekend recap, this was basically red right across the board. And Tuesday's session doesn't speak for these gains. It was yesterday's session, which bulls got off to a great start to the week, which we'll talk about in just a moment when we look at the charts. You can see where some of the major indices are versus their key simple moving averages. We're battling with the 10 SMA now across the board. We're still above the 50 and mostly above the 200 except for the Russell 2000. When we scroll down here, we just take a look at sectors. You can see a little bit more creeping into the green. It's semi-defensive theme though. We have staples and utilities up here, but we also have tech and materials as well. On the downside, industrials and energy are at the bottom of the pack. When we look at major markets, you can see a little bit of an unwind in the VIX here, down 6% over the past 5 days. We also have at the top of the heap, treasuries, gold, silver, a little bit of that flight to safety still kind of holding up top, best in class relative strength, if you will. So let's jump into the charts here. Let's take a look at what's going on. This is the S&P 500. It's the cash market weekly time frames where we always start our analysis. Each bar represents 1 week worth of trading. We can see last week we talked about this being the biggest pullback of the year, the biggest down week of the year, which I know sounds like a meaningful statement, but when you haven't really had any down weeks, anything looks big. So we did have this 2.16% down week last week, and notice where we are already, 1.89% to the upside. So we almost have recovered all of the pullback from last week in just 2 days worth of trading. Notice though, we do have perhaps an inside week brewing here, just because we did have a large range last week. So we are currently trading above the lows, below the highs. We'll see how this ends up shaking out towards the end of the week, but we're seeing buyers, dip buyers step in here fairly quick, 2-3% pullback off the highs, and now we're starting to rebound higher again. We're going to want to see if it sticks into the end of the week. That's what's going to be important, and we are still below that 2,800 level. We're basically now starting to see that two-way trading develop right at this key significant level. It shouldn't be that much of a surprise, but the fight is taking place right here, and one of the things we talked about in last week's video was, look, you could take the stance now where this market is not interesting until we are above 2,800, or we've suffered some, bigger decline that makes it more attractive. But so long as we grapple around these levels, maybe it's time where we just kind of want to sit back, let the two-way trading play itself out, and wait for the market to make a more definitive resolve here. I think that's a totally reasonable, sound approach to thinking about this market right here. But we do want to keep in mind though that when we look at something like the Qs here are actually very interesting because they have broken out now and started to take out last week's highs. So we are getting actually new year-to-date highs here in the Qs. And if we look at the composite, because that is the full index here on the Nasdaq composite, you can see this is more so an inside week like the S&P 500. So it is the very tech kind of heavy Qs that are helping lead right now, but this is a positive constructive sign. 2.64%. We're right back to last week's highs. We're trying to break out right now. We're trying to continue this trend higher. So you might have that new leadership group emerge out of technology, which had been sluggish for a little bit of time. If we look at the daily chart here, remember in our last couple of week videos, we just noted how kind of sluggish the Qs were up here going north of 170. Now we're starting to see a little more spring behind the step again, we'll see if it sticks into the end of the week, but this is where some positive developments are happening right now in the overall broad market. So if we go back to the S&P 500, before we left that, the only other comment I wanted to make here is take a look at the MACD on the top pane of my chart. You can see that is actually continuing to make new highs right now, indicating that there is still weekly momentum that is building here on the weekly S&P 500 chart. So something that we don't want to ignore either. Bulls still overall are in control here. We want to, of course, pay attention to this key 2800 level. That is, technical resistance at this point, but we still do have momentum favoring the bulls on the bigger time frame. So if we go down to the daily chart now of the S&P 500, we'll go to the SPY ETF. And you can see here that we are, again, rebounding nicely. We've recovered most of last week's sell-off, and we are back to resistance now, fifth time, sixth time, I don't know, however you'd like to count this, but we are knocking on that 2800 door again, and we want to pay attention just, again, how the market reacts here. Maybe everyone's getting tired. The more times you repeat and hit and bang against a level, the more chances, the higher the probability is that the next time around you are going to push through that level. It's not a prediction, doesn't have to happen. It's just simply something to keep an eye out on. So for the S&P 500, to really kind of sum it up, 2800, or I guess if we're looking at the SPY here, we're looking at 281 on the upside, and we're looking at last Friday's lows, 272 and change, 273 on the downside. That's the range that we want to be paying attention to right now. That's the range that we're in, but I do think yesterday's session on Monday was an important one, was a loud follow-through session to last Friday's sort of open lower, close strong, and then that nice reverse, and then that nice follow-through session on Monday. Something to be said for that, at least in the short term. So that's the S&P 500. The IWM still, again, this one now is underperforming versus its peers here. It is at kind of still the bottom half of last week's pullback. It's only retraced, 30-40% of this move. So there's still definitely work to do here. It has been the leading index over the past couple of months. So we do want to continue to pay attention to this. If we look at the weekly chart, again, you can see very much looking like a potentially inside week brewing here, and we'll see if we can make more progress into the close of this week. Last but not least, we have the Nasdaq, which we've already touched on. It's leading the charge right now. It's breaking out to new highs here. Some good strength coming through. We are actually long this, so we do have a long position in the Qs currently. That is an active open position. It's a tactical position, so for us, that means it's something that's going to be fairly short-lived, but we're looking just to see how much and whether or not this momentum can continue for the next couple of days, and it is a position, again, that we have on right now. So that is the broad indices. Let's take a look at some of the other major markets here. We'll go to TLT next. If we go to the weekly chart, you can see this is also up now 0.4% this week, and if we go down to that daily chart, right back into a key inflection point, key technical resistance, 122.50. That's been the spot that has stalled out this market since February of last year, and we are back to challenging it again almost 1 year, a little over 1 year later. We'll see if we can get through it this time around. There's been lots of attempts at it. Sellers continue to show up. We'll see what happens into the close again of this week. So some good kind of decisive weekly candles that we do want to keep our eye out across equities this week, as well as the bond market. If we go over to oil, we'll take a look here that mostly sideways here, still kind of stagnating, 1.3% to the upside. That is constructive, but notice it's basically a series of very tight overlapping 4 weeks of weekly trading sessions here, right between this $11.50 and call it $12 and a couple of pennies. That's been the sideways range that we're in. We're still overall trying to hold higher here and a slight grind higher since bottoming out in January. That's going to be important to see. Last Friday's session at the lows, that's kind of the key reference point I'd be paying attention to, and follow through above essentially today's highs, 1205, 1206. Some conviction on a move above there would be constructive for the bulls. If we go to natural gas next, you can see this one moving sideways here. It had a rough it had a rough Monday. It was a quiet end to the week, and then it was a rough open to this week, where Monday we saw a 3% gap down right into this 24.45, 24.50 area that we've sort of been labeling as a general sort of line in the sand here. I think buyers really need to step in here for natural gas if it rolls over and starts, breaking back below 24.50. I think this thing looks pretty gloomy to potentially challenge the lows again, but if it can stabilize here like it showed early today and close today, then maybe there's some hope here and it can rebound. That's going to be the line in the sand I'm watching kind of going forward. Last but not least, we got metals, GLD here popping up into Tuesday. You can see it's making a little bit of progress so far on the week. It was down on Monday, rebounding on Tuesday, trying to get maybe some follow through off of last week's kind of outside reversal week. We'll see if we can put in and continue to solidify a potential higher low here. Jury's still out. Let's give it some time and see if buyers can continue to hold up. And last but not least is silver. Very similar situation here. It is positive on the week right now. It was down on Monday, up on Tuesday, following through from last week's kind of outside reversal week, and we'll see again if we can put in a better or continue to put in a potentially higher low here after breaking trend just a couple of weeks ago. So that is it. That is what I have for the midweek video. Hopefully you enjoyed it. If you did, you can subscribe on YouTube or follow us on thetraderist.com. All of the videos posted in both places every Tuesday and Friday. You can subscribe to stay up to date with all of the latest. Thanks so much as always for tuning in, and we'll be back on Friday with the weekend recap video.